Okay, Mike Swanson of Wall Street Window here. I want to do a very quick update for November the 5th, 2018 when it comes to the Nasdaq, because we've seen, of course, some weakness in the stock market in the month of October, but a rally at the end of the month that does have many people pretty optimistic, but I ain't so sure about their optimism because there's lots of stocks inside the Nasdaq that are in very big trouble, and I'm going to show you 5 of them in this video that are among the worst. First is Western Digital, symbol WDC. Now, Western Digital already has gone through a price collapse just in the past 3 months, fallen over 50%. But what I want to point out to you is that there were 2 warning signs on this stock. The first is the indicator below the chart, WDC divided by SPX. It's a relative strength ratio. That indicator goes up when the stock is outperforming the S&P 500. When it trends down, it means that stock is lagging the S&P 500. Stock, as you can see, started to do that in April, which was a warning sign. When the stock market rallied in August and September, this stock failed to rally and, in fact, broke down. Another big warning sign, because stocks that lag on rallies tend to drop more than the market when the stock market declines, and that's exactly what this stock has done. It's been a complete disaster. Now, the second indicator is on-balance volume, which is an accumulation distribution indicator. It measures the volume in a stock on the up days and subtracts that on the volume on the down days to create a running total. So when this indicator is trending up, it means that there's more volume on up days than down days, and the opposite, of course, is when it's declining. Now, when this indicator declines, when the stock price is not yet declined, it's another giant warning sign. As you can see, that's exactly what happened with Western Digital. Very bad. So there are warning signs here. And here's a stock that's starting to signal some of the same warning signs. Sirius Radio Holdings, symbol SIRI. It did bounce last week, but relative strength peaked out in July, and on-balance volumes have been trending down, saying to us this is a stock to avoid. Now, another stock which is really more troubling than the other 2 for the ramifications of it is NVDA, symbol NVDA. As you can see, I'm going back here on a 2-year chart to give you a big picture look on this, because NVIDIA was the top performing stock in the entire S&P 500 in 2016. In fact, I remember the very first show on Fast Money in 2017, Kramer declared it to be a must-own stock because of what it did in 2016. Now, it became one of the most popular stocks to own and trade. According to Ameritrade, on a regularly every month, it was one of the most widely owned stocks. Now it's in giant trouble because relative strength broke down in October, on-balance volume broke down in October too, just like it did on WDC and Sirius Radio. It's a stock to really avoid, and it's one of the most important stocks because so many people are in it. Another stock is Netflix. Both indicators broke down in July. It had a pretty big drop in October, bounced back up to 320. Think if it stalls out here, it's going to be putting on a classic dead cat bounce pattern. Now, for disclosure purposes, you need to know that I am short Netflix. It means I'm betting against Netflix shares through short selling. Some people I know may be doing that with puts, but I'm doing it by shorting the stock because I see this as materializing with a dead cat bounce pattern with the 2 indicators below in a disintegration since July. So I think Netflix is going to lead the market lower on any stock market drop, and even the stock market does not drop, Netflix could drop regardless. So again, this is a classic dead cat bounce pattern. What that pattern essentially does is take my twofold formula pattern for buying, the single best pattern I've ever used when it comes to buying stocks, and turns it upside down. So the dead cat pounce pattern is the best pattern to use for betting against stocks, and it's materializing now in many stocks. Another one that it's happening with is Amazon. Amazon has had a nice drop since its peak in September, But relative strength indicator in sharp decline, and more important, on balance volume is almost in a disintegration, performing worse than even on Netflix. But Amazon has bounced back up to its 150-day moving average here, close to its 200-day moving average. Again, this is a dead cat bounce pattern. So if this stock goes sideways here for another week or two and rolls over, it's going to be a bad situation. And many, many stocks inside the Nasdaq 100 are lined up like this, which has some negative ramifications for the stock market indices themselves. So this is my update for November, and we'll be talking with you later.